Hello, everybody. Welcome to the VA Loan Crash Course. My name is Spencer. We've at Home Loans. Gonna walk you through some information, some hopefully knowledge on the VA loan today. Get you some good information and get you kicked off in the VA loan process wherever you are, and let's hop right into it. All right. So VA Loan Crash Course. Obviously, you're seeing that. First screen here is Evan. I work for Evan. I'm his assistant. If you call in, you'll either be speaking with me or him or possibly Alec. We'll get you started in the process. Evan's been doing it for quite a while now here and been working underneath him, so hopefully we can get you straightened out, whatever you need. But this is his contact information. Please feel free to reach out, 316-669-5272. You might get in touch with me as well, but that's what we got. So, all right, so here's kind of a rough outline of what we got in front of us today, the objectives. So we will start with history, kind of highlight some important pieces on the history of it, run through some common questions, go through some 101 stuff, and get a little scenario exercise, kind of enumerate out some details on some cost savings of what you would look at on a VA loan versus other loan types like conventional loan type. Talk about who qualifies for the VA loan, and then get you off on some practical information on, with all this information, how do you actually go get a home with it. So that is that. Starting on history, okay, how did the VA loan start? It started actually coming out of World War II, 1944. Okay, there was the GI Bill passed, which was about all the soldiers coming home, right? How would they get their education piece solved? So that was about getting them educated, getting them back in school. And then there was also the VA loan part of it, which was about how are they going to be housed? How are they going to get a home coming back from the war? So coming out of World War II is how that one started, and that's what kicked it off. It's evolved, obviously, since then. Okay, now a big piece to understand about the VA loan, really kind of the technical essence and fundamental of the VA loan, is the VA is guaranteeing your mortgage. They're writing an insurance on your mortgage, essentially up to 25% of the loan amount. So give you some specific numbers. Let's say you got a VA loan for $400,000, okay? Let's say you get into the home and you literally never make a payment. You never make a payment on it, and you'll get kicked out of the home if you never make a payment on it. You get kicked out. The home goes to a foreclosure. You sell the home. Let's say that they sell the home for $200,000. Okay, it's a $400,000 home. Sold it for $200,000. So the investors who hold your mortgage, they just got $200,000 from foreclosure, but they're out $200,000. They took a $200,000 loss. They can go to the VA, prove that they took that loss, and get refunded 25% of the original $400,000. They can get refunded $100,000 in this example for taking that loss. That is kind of the technical fundamental essence of a VA loan. Okay, the VA is insuring your mortgage. What that does is that creates a less risky loan type for those investors who hold the mortgage, and that drives interest rates down. They don't demand as high of an interest rate as compared to other loan types like a conventional loan, because it's not as risky. They'll know no matter what, they're getting 25% back from the VA, from the government, no matter what happens. So that's a very important piece to understand about the VA loan from kind of big picture. So there's that. All right. So what does that actually practically lead to, right? So we talked about lower interest rate. Obviously, it leads to lower interest rate, but also it leads to 0% down. Okay, that's one of the reasons why you can go 0% down on the VA loan. Conventional, FHA, other loan types, got to put a down payment. Can't go 0% down. Okay, also what that means is you don't have to pay mortgage insurance, PMI, or MIP. Okay, those mechanisms, mortgage insurance, that's exactly what the VA is doing in another route, in another format, in another mechanism. It's you're paying insurance in the event that you default. You pay to an insurer, and if you ever default, that insurer would pay the investors. It's the same kind of deal. You just don't have an insurer with a VA loan. You have the VA doing that same deal. So that's what it does for you. No private mortgage insurance. You can go 0% down and lower rates. All right, so kind of kicking off in some common VA loan questions that we got, right? Can you use your VA loan more than once? Yes, you absolutely can. There are implications to using it more than once We'll get into those, but you definitely can use it more than once. Okay, can you have multiple active VA loans? Yes, you can. Yes, you can as well. There will definitely be practical implications to having multiple active VA loans. Specifically, what goes on is when you have 0 VA loans, when you're moving from 0 to 1, you're unlimited in the amount that the VA is willing to insure your mortgage for. It's an unlimited amount of insurance money that they're willing to put into your home. When you are moving from, you have 1 outstanding VA loan home, and now you're getting your 2nd or your 3rd, the VA puts a cap on how much insurance money they're willing to put in that 2nd and 3rd. And what that practically means for you is you might have to start bringing a down payment. If you go above your cap, you have to start bringing a down payment. With us, it's a 25% down payment. So let's say your cap was $400,000 and you wanted to take out a $500,000 mortgage. That's a $100,000 difference. You'll need to bring 25% of that. You'll need to bring $25,000 as a down payment in that scenario. So yes, you can have multiple VA loans outstanding, but you might be forced to bring a down payment because of that. So does your VA loan benefit ever expire? Nope. If you got access to it, you're good. If you serve, you're good. You get the VA loan. All right. Does it have a size limit? No. No. Just like I said there, if you're going from 0 to 1, if this is your only VA loan outstanding, unlimited in the amount that the VA is willing to insure your home for. All right. Does a service-connected disability affect the VA loan? Yes, you have a practical benefit there. You get your biggest closing cost waived, which is the VA funding fee if you have a disability rating. That'll definitely help you. All right, can you use your VA loan while on active duty? Absolutely, yes. That's most of our customers are active duty. That is who we work for primarily. You definitely can use your VA loan while on active duty. If you want to do that, give us a ring. All right. Can National Guard, right? Can Guard or Reserve? Yes, you can. Absolutely. Yep. All right. So that's kind of a recap there, looking at that matrix and what we just covered. All right. 101, getting into some 101s. All right. So when is the VA funding fee paid? We kind of talked about that, right? If you have a disability, you get that waived. VA funding fee is paid at closing. Technically, always paid at closing, but you can also roll it into the loan. What that means is it'll be paid to the VA at closing, but you can either pay it all in that lump sum right there at close, or you can finance it and pay it over the life of your loan, increase your monthly payments a little bit. But generally speaking, that is usually your largest closing cost, and it can be expensive. So if you don't want to pay thousands of dollars at close, you can just pay lesser amount, usually, $50 to $100, whatever it may be. It depends on your loan amount every month, and then boom, you pay it off over the life of the mortgage. And so getting into the details of what that funding fee looks like, right? There are 2 factors on what creates your VA funding fee. 2 factors dictate it. A, down payment. B, have you had a VA loan before? So when you've had a VA loan before, VA funding fee becomes more expensive, as you see here on that right column, specifically for 0% down. So if you're going 0% down and it's your first VA loan, it's going to be a 2.15% VA funding fee. If it's your subsequent VA loan, you've already had one before, it's going to be a 3.3% VA funding fee. And the percent is your loan balance. So if you had a $500,000 home loan, you're going 0% down on $500,000, it would be 3.3 of that. And as I said there, you could pay that at close, or you can make a payment on that and pay it over the life of the mortgage, roll into the loan. If you bring 5% down, they'll drop it, and they'll drop it to 1.5%, whether it's your first or subsequent use VA loan. And so as you can see, that can be a significant discount, especially if it's your subsequent use VA loan, okay? So that is definitely the VA gives you a benefit on bringing a down payment, okay? So you might want to consider, if you have that cash, might want to consider bringing that down payment. If you're working with us, we can get you that quote. You can see exactly what the numbers look like on a specific home. 0% down versus 5% down. A lot of times that makes a lot of sense. Then if you go 10% down, they'll give you a little bit more of a down payment. A little bit more of a discount on your VA funding fee. They'll give you 1.25, okay, is what they'll charge you as compared to 1.5. Not as significant as the movement from 0 to 5, but you still get a discount, right? So there's that, and then there is the VA funding fee on your refinances, on your IRRRLs, and your loan assumptions. The cash out refis, as you see, 2.15 versus 3.3 on an IRRRL. That's a refinance where it's purely about moving the interest rate down. It's just 0.5% on a loan assumption. An assumption is when you literally take over someone's old VA loan. They just transfer it to you. So if you're buying a home from another veteran who has a VA loan at a really good rate, let's say they got it right after COVID, it's 2% or whatever that is. You want to take that over, boom. They allow you to do that. That's called an assumption, and it's 0.5% on the VA funding fee to do that. So that's what we got on the details of the funding fee. COE. Okay, so what is a COE? A COE is a certificate of eligibility. It's essentially a standardized document the VA produces that shows you're eligible for the VA loan. So if you're eligible for the VA loan, you'll have one with the VA. Don't worry too much about that. We'll pull that on your behalf. If you're working with us, we are hooked into the VA system, can pull that. Not too difficult, but that's what that is. It's just essentially a piece of paper from the VA says this person eligible for the VA loan. They've had a VA loan outstanding before. They haven't. This is their first time. It gives you all those details. If you're working with us, we'll take care of that one for you. All right, so what kind of properties can you buy with the VA loan? So obviously, as you'd imagine, you can buy a single-family home. It'd be weird if you couldn't. All right, so you buy a single-family home with a VA loan. You buy a condo. You will need to get the condo association cleared with the VA, which will add a little bit of work, a little bit of time to the closing timeline, but no big deal. You just really got to collect documents from the condo association and turn it to VA. Can't buy a condo. You can buy a townhome. You can buy multifamily units. That's a good one. You can buy anywhere from a duplex to a quadplex, triplex, obviously too. You just have to live in one of the units, right? So you can't buy a multifamily if you're not living in it, but you can buy it if you are living in one. VA loan always has to be your primary residence. Okay, you can't buy investment properties with a VA loan. You have to live in the home. So, but you can get best of both worlds with that multifamily. You can live in one unit and have the other 2, 3, 1 unit, whatever you're buying, as an investment. Okay, so that is allowed. You can buy manufactured or mobile homes. There are a few details to that, though. The manufactured home had to have been built after 1976. That's when HUD started regulating them and standardizing how they are produced. B, you have to own the land underneath the manufactured mobile home, right? So a lot of times in a trailer park, you don't own the land. You pay rent to the park, and they own the land. Can't do that with a VA loan. And then 3, it has to have a permanent foundation. It has to be affixed to the land with a permanent foundation. Okay. You can't buy a mobile home, just that's the details on it. You can buy a new construction home as well, the home being built. What you can't buy a commercial property. Fortunately, can't go out there and buy a mall with the VA loan. Can't buy raw land, but you can buy raw land if you simultaneously build on it. Okay, you can build a home with the VA loan, and you can buy it all in one go. Buy raw land and have the home going all in one go, but you can't just straight up buy raw land and let it sit with no plan to build. You can't do that. Okay, can't buy undeveloped lots just like raw land, and can't buy investment homes we talked about. All right, so there's that. So kind of a breakdown on some numbers looking at a VA loan versus conventional. Here we go. We are tight on time, so I'll let you read that through. VA, big picture there is VA loan will have a lower interest rate as compared to conventional loan, and that'll help you out, drop your monthly payments, and no private mortgage insurance. Those are the details on it. If you're interested in seeing it, you can screenshot that real quick and look through it. That's just a little example on a specific one. So who qualifies for it? Anybody who's served, and surviving spouses as well. If your spouse was lost their life serving because of service, you can qualify as well. So that's who qualifies. All right. And how to win a home with the VA loan, right? So a big piece of setting yourself up for success is who you're working with. Make sure you're working with someone who understands a VA loan. That comes in primarily 2 people, realtor and your lender. So if you want to take the next steps, see what that is, we would love to work with you. That's what we do. That is our business, VA loans, and we can connect you with a VA loan specialist, realtor as well. So that'll take you a long way, just working with a specialist. So if that's you and you would like to speak with us, please reach out. We'd love to speak further with you. That's what we got. That's Evan's contact information. Reach out to him. You might get in touch with me as well, but we are here. We appreciate your time. Thank you for tuning in. Once again, my name is Spencer. We've at Home Loans. Please feel free to reach out anytime, and we are here. Thank you.